Hey everyone, welcome back to Capital Markets Quickie, your daily dose of market action. I'm your host, Endrit Sella, and I'm here to catch you up on what happened in the stock market yesterday. So let's get into it. US stocks were on the rise Friday, and it wasn't just a typical day in the markets. The Standard & Poor's 500 jumped 0.5%. The Nasdaq climbed 0.7%, and the Dow added about 300 points, also up 0.5%. Both the Standard & Poor's 500 and the Nasdaq marked their fifth consecutive day of gains, thanks to a big rebound in tech stocks. And what a week it's been. The Nasdaq closed out the week with a gain of more than 5%, making it the best week of the year so far. The Standard & Poor's 500 rose 4%, while the Dow climbed 2%. These gains come despite all the recent volatility, with markets being whipsawed by debate over interest rate policy. So, why the bounce? Well, Wall Street is warming up to the idea of a larger-than-expected rate cut by the Fed. It seems traders are now betting there's about a 49% chance the Fed will opt for a half-point rate cut at its meeting next week, up from just 15% the day before. That's quite a swing. Reports from the Financial Times and the Wall Street Journal suggest that the size of the cut is still up for debate, and even a former New York Fed president said there's a strong case for a deeper cut. All this is adding to the speculation, and markets are responding. In the bond market, the yield on the 10-year Treasury slipped to around 3.6%, down 2 basis points. It's clear that traders are bracing for a potentially big move from the Fed, and with concerns about the labor market and the risk of recession still looming, we're likely to see this volatility continue if a half-point cut happens. That's it for today's Capital Markets Quickie. I'm Endrit Sella, and I'll be back on Monday with the most important events in the week ahead. Have a great weekend, everyone.